Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Market's disappointed with the outcome out of the ECB meeting today, as we talked about the importance of that meeting yesterday, and really just another point of kicking the can down the road here by the ECB. A lot of talk, no action, and Draghi still out talking after the ECB announcement today about they are working on plans for potential bond buying, even if it goes against what Germany says. But again, a lot of chatter, not a lot of action, and the market's really kind of disappointed with that and really not able to digest it very well. So you see the S&P sell off pretty big, but really a fairly nice rally in the last hour of the day. So in the S&P down just 10 points on the cash index as we go into tomorrow morning's all important unemployment figures for the month of July. Right now those estimates stand anywhere between 100,000 to 115,000 jobs created for the month. That's going to be a key driver for tomorrow's number, but the big question is bad news really good news? Because any bad news, any big miss that we see in that unemployment number, I think will fan the fuel to the fire that the Fed will be in with more easing sooner rather than later. But any good number that we get, any number that we get well over expectation or consensus, may also be good news for the market. So it could be a very, very volatile session depending upon how traders take this unemployment number tomorrow. When we look at the interest rate side of the market, again, we see the market just very disappointed with what the ECB had to say. We saw a lot of built-in expectation through higher interest rates, and we saw those come tumbling down here a bit today, with the 10-year yields actually ending at 148 basis points, down about 4 basis points, and we see the 30-year down at about 256 basis points, down several basis points as well. But probably the most interesting spectrum from the interest rate standpoint was to take a look at Spanish and Italian bonds after that ECB announcement this morning. Talk about a rocket ship. You saw Spanish bonds rocket up 42 basis points in one day, all the way over 700 basis points in one day, and then you saw Italian bonds well over 600 basis points. And these are levels that we've been talking about for some time that really are not sustainable for a sovereign to fund themselves at these levels. How much longer can they go at these levels before the sovereign itself is going to ask for an all-out bailout, talking about Spain, versus just talking about bailing out the Spanish banks? And that's something the market is very, very concerned about, particularly as we go into August and into September. More importantly for Europe, there is a lot of debt that is to be auctioned by the peripheral in the month of September in Europe. And with a lot of supply and not a lot of buyers for that supply, there's a lot of questions being asked about how much more will it cost for Spain and Italy to fund themselves going forward. So these are all things the market has particular worries about. Watching some reports, some other reports coming out tomorrow. Not only will we get that, we'll also get an ISM manufacturing report, non-manufacturing services sector report tomorrow, and services data out of the EU, out of the Eurozone, Germany, and Great Britain. Give me a call at 888-596-5817. We can discuss financial and commodity trading opportunities. As always, remember, futures trading is not for everyone and does carry a high degree of risk.